everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, September the 10th. Green across the board. Follow through from good China export numbers coming out late Sunday night. Dow Jones up 140, Nasdaq up 46, S&P up 16.5, and Russell as well 16.5. Markets kind of gapped up at the opening and just kind of grinded higher, and then we had a little bit of a pullback from 2 o'clock into the close, but nonetheless we have the same style of trade where markets gap up and then just kind of grind higher pretty much most of the day with very lack of follow-through. So if you came into the day long, that's great. If you're not and you're day trading, well, you have to be a little bit more selective where there's a little bit more risk as well because you're looking to get flat by the end of the day. You only have 6.5 hours. But things are starting to shape up and getting really interesting in the markets, and I am looking for the markets actually, after this little initial pop, I do think that we're coming into seasonal weakness, that we probably get one big shakeout before the markets do indeed move higher into the new year. I still feel that way. The markets still look that way. They still look a little frothy. Coming down to a 2, 3, 4% pullback, and then go into a real big rally. I'm not sure if that really is still attainable. But again, let's just take it one step at a time. And again, if you're day trading, really not to worry too much. But if you look at the longer term analysis, and I like to look at everything, even if you're day trading, gives you a little bit more of an edge. You want to really see where things are headed. I want to show you a few things here today, just to kind of put out a little bit more of a bigger picture. Here's the dollar, and I said that I think the dollar is going to actually really start to move higher, and we are stuck in this little confluence area of support, 81.5. We really need to take out this area here, 82.78, to really get going to the upside. And until then, you have to really start looking to stick with the trend. And the trend right now, the short-term trend is down. So we did break out of certain areas in a lot of the sectors that we follow, which I'll show you in the chart segment. So we need to see some follow-through today, maybe some sideways consolidation, and then a couple of big moves up, and then see where we go from there. But we did break out of some bearish symmetry. We still are in a downtrend, but looking a little bit better. So we'll need to really see what happens here between today, tomorrow, and of course Thursday. So right now the U.S. dollar, I still like it. It's still fine, sitting above the moving averages, sitting above horizontal support. And if it can hold and start to rally, well, then obviously it will put pressure on gold, oil, commodities, and of course equities. Now, I like to look at, okay, what is everything else doing, right? What's all the world markets are doing? I showed you EEM yesterday had a big follow-through from that doji candlestick that we had the previous day. And that's why I say, just because it's a doji candlestick, all it does, it says indecision. That's all it is. And then if the next day it needed to take out that candle high or low to really trigger that candlestick. So still valid, still good, and I'll show that to you in a moment. Let's take a look at the FTSE, and as you can see here, it looks like we have a bear flag coming in, and what looks like a lower high is starting to be in place. So this is what we want to watch, because if the indexes worldwide are starting to break down, well, there's a better chance that the S&P will probably break down along with it. Here is the DAX, the German DAX, which is really important to be watching. Again, another lower high. Looks like a bear flag here. Again, the flag has not triggered, so this bearish pattern, all it is right now a rising uptrend. But if you can see the flagpole on the flag, it needs to really break down in this area here for it to really trigger. But right now, there's a bearish formation forming in the DAX and as well as the FTSE. Now, take a look at the worldwide market. Okay, this gauge is the MS worldwide market, and again, we have a double top here in place, also making a lower high from this previous high. So something to keep an eye on, all right? Just something to watch. The NYMO still in neutral territory, but starting to climb. We're in right about 30.45. Anything, another big 1 or 2 days up will be an overbought, in an overbought state, and that's something that if you are carrying positions, you would want to kind of tighten up shorts. Now, interesting here, the VIX did not move. With a big move like that on the daily chart, now, of course, 15, 30-minute chart, we did have a breakdown, but the VIX did not move. And as you can see here, still hanging above the 50 and 20 days. So it looked like that people were maybe starting to buy some protection. But if you go to the put call ratio, this is the lowest reading since 2009. So we have a little bit of different readings in the CBOE put call and the VIX, but you can see this is extreme complacency here, guys. So this is something that you wanna really have a heads up in this market, and just be nimble here because anything can happen. And as you can see with the talk of war with Syria, I mean, you could wake up in the middle of the night and S&P down 20, 30 handles. So a lot of risk out there, and that's why I would be at least tighten up stops, put some trails in if you are holding positions. All right, so let's go into the chart segment. Here's the EEM, like I showed you. Here's that doji. We broke out. We gapped above it. So that breakaway. This actually is a breakaway gap, breaking above the previous day high and then just moving higher. Now, I had that small little Fibonacci retracements from here, low to high from this area here, and now we broke back to it. So I took that out, and now we're looking at the 61.8% retracement coming into a lot of resistance, as you can see here. Okay, a lot of demand up in this area. So let's see if the sellers are interested in selling this EEM short. Now, right now, obviously, we don't want to just be looking to short because price is in this area, right? Because price can travel to the 76% retracement. So we want to make sure that we get it triggered, meaning that we want to get a rollover in price. We want a candlestick reversal, and then, of course, taking out the previous day's low. So interesting developments in the EEM, but again, fueled by strong China exports coming out late Sunday. And that's fine. So now we want to see if this is going to have some legs. Maybe we get a little bit of a pullback, create some sort of a bull flag into this 38% retracement, and then again catapult higher. This will definitely help the bullish case, no question about it. But remember, the other markets in Europe are actually making lower highs. That's going to need to change. Now let's take a look at the S&P 500. We did break out of this daily downtrend, but again, it's one day. Let's see if we can break out above, add another day, and then maybe pull back a little bit or consolidate sideways. That would give me a little bit more evidence that the market is indeed looking to at least challenge the highs here. But right now, one day doesn't make a trend. We can easily fall back in again. Okay, that's the S&P 500. Now here's that 60-minute chart that I've shown you. We are coming into some really big support resistance here. So this is the area here where I think it's going to have a tough time, 1682. Now, we could easily challenge the highs, but we're going to need to see a little bit of a pullback, maybe a pause underneath this resistance area in order for it to break higher. But again, just want to show you that 60-minute, we're coming into some big resistance here. And here is the spiders, the daily chart. Same thing. We couldn't really break out of this downtrend channel. We did break out yesterday. Again, one day doesn't make a trend, but we do have now a crossover in MACD, and our stochastics. Momentum indicators are picking up, but you can see volume is very light. And I mentioned that earlier in the segment that the volume is really, really light. We need to really see some volume start picking up a little bit. And again, it's the first day back from officially first day back. We have a full week ahead of us, and it'll be interesting to see if this market here does have some legs to the upside. Bear flag didn't trigger. Remember, we see the bearish patterns, but in order for it to trigger, we need to take out the lower trend line here. So the bear flag that we have has not triggered yet. So we'll just see. Today's going to be an important day, today and tomorrow as well. That's the diamonds, one of our leaders here, leading the way. MACD crossover, stochastics making high, now starting to break out of this downtrend line. We did have a little bit above average volume, but it's still the same. And now we're taking out this little area here. Okay, so now what I like to see is I like to see a continued move higher. And again, I like to see this at least consolidate a little bit and then start to break out to the upside. But, time will tell. Here's the transports doing well. Now, remember, oil is still at really highly elevated levels here, so we need to really see if this is going to hold the transports, because if the transports start to break down, I think you're going to have other markets start to follow as well. Goldman Sachs, nice day. Again, breaking out from the downtrend. We're still in a downtrend, guys. I wouldn't be looking to buy Goldman here just yet. Maybe another couple of days consolidation. The theme remains the same, as well as the sectors and Goldman. Here's the XLF, doing a little bit better. And again, this is something that we want to see, right? If you're looking to really looking for clues to buy this market here. And as you can see, this didn't quite break this downtrend line here, and we have that little downtrend channel. And again, we have perfect symmetry with all the other sectors. So if they're all starting to break higher, which is great, let's see if this breakout holds. That's the key. Apple has the conference 10 o'clock this morning. I would just stay away from this at the moment. Apple is known at reporting announcements and new product to be down 0.59%. Okay, this is something that you could take a look at going past history. So, 0.59% is not a big average, but it is heavily weighted in the S&P as well as the Qs, so it could be a market mover today, and this is something that's going to be very interesting to see. I do think they have some product launches that they're coming out with, cheaper products, and I think some analysts are actually worried that it cuts into their margins, but we'll see. Let price tell you. That's why I wouldn't come into this, but if we do break down lower, you probably will get a good buying opportunity if it could even get down to the 200-day. 50 starting to cross at 200, so we're looking for that golden cross to the upside. Let's see if we can get down here. This would be a dynamite buy in this area and going into the Christmas season. All right, so we'll just take it one step at a time here. But interesting. Watch Apple today. Apple will be a key market mover, I would imagine so. Here's the Qs taken out. Like I said, the last couple of weeks, NASDAQ doing fantastic. While the market was breaking down, the NASDAQ really did not, and pretty much held the market together here with a lot of the big cap techs, LinkedIn's, the Googles, the Amazons of the world, the Baidus. So, that's something that if you do play the high beta names, that you must be doing well. And if not, it does help the market itself. So keep an eye on it. The next couple of days are going to be very, very interesting. Let's see what the new developments happen. And again, always keep your eye on what's going on with current events here. We do have this possible war coming, so that's going to be interesting too as well. All right, guys, have a great day, and we will speak to you tomorrow. Take care.